Right. Okay, perfect. Yeah, thank you very much for attending the webinar. I'm going to flip us over to the risk warning here, have a little read through that. Usual format, should be around 20 minutes or so. Any questions, fire them through any time. Typically what I'll try and do is just address them at the end so as not to lose the flow on things. Going to cover the main currency pairs, the main indices, stock indices, and the main commodities that are traded on the LCG trader, but anything else you want to look at, just let me know. Typical format is we'll just have a quick discussion on the kind of key drivers and kind of news-wise of what happened last week, what's general context of things, and then move on to the charts for the bulk of the webinar. So we're on June 26th, last full month of June. The big theme still very much in play. We have some interesting developments from the Bank of England, especially last week. We've been looking at this kind of central banks tapering QE theme. Bank of England suddenly joined the fray a little bit after Andy Haldane, the chief economist of the Bank of England, said that he might soon be supporting a rate rise. So he's normally quite dovish. So he's an important guy. He's the chief economist. He's also on the dovish end of the spectrum. So who knows, after that vote week before last, in which the Bank of England voted for 3 rate rises, the 3 members voted for a rate rise, how many others are looking to do similar things? So we've got another speech from Mark Carney tomorrow, so he will probably try and walk back those Andy Haldane statements in in the best subtle way that he can. But obviously Mark Carney is trying to push for a sustained period of low rates, but inflation's getting higher, and I think some of the other members are looking at the economy, which has generally held up pretty well, and thinking that actually we can certainly handle a rate rise, at least undoing that rate cut that we had right after Brexit. So that's interesting for interest rates. Obviously, it's a generally bullish development for the pound, supports our general idea that actually the pound's been a little bit oversold, and the fact the economy's faring well, and that there's, even if the Bank of England don't raise rates, I think probably at these levels the pound's baking in more easing, and even if that more easing doesn't develop, probably the pound deserves to be a bit higher from here. The big theme last week was the drop in the oil price, still looking pretty soft, but signs of a small recovery at the moment. We'll look at the chart more specifically. The Nasdaq obviously had that big crash the week before last, and it's retraced about 2/3 of that now. It's looking like another dip buying setup, but we'll address that chart in more detail as well. One of the big stories this morning is that we had a bank bailout in Italy. I think that's generally supported the sentiment across European indices, specifically because banks are always such an area of risk that when it looks like the governments are willing to just step in and bail them out, obviously that takes a lot of risk off the table for investors, because basically governments are taking on all the risk. We have a lot of Fed speakers this week. Obviously that's important in the context of the Fed being quite bullish, quite hawkish in the last official statement after they raised rates this month, and so it seems like probably September is on the card. So what they say this week will help develop the opinion in the market as to how likely that September hike is. A bit light on the data front, but we do have durable goods later today, just in less than an hour actually, and we've got US and UK GDP later in the week, and also on Friday I believe it's the Eurozone CPI, which again sort of feeds into this general idea of inflation picking up. What does the European Central Bank do in response to that higher inflation? It actually dialed back slightly, if you remember last month. So if we pick up again this month, then it puts that when do we taper agenda back on the front foot. And of course, yeah, I'm sure you've just seen in the news that Theresa May struck a deal with the DUP. So it seems like the only thing they're actually going to be officially agreeing on is Brexit-related topics and security. as well, which probably the DUP would have voted in line with the Conservatives on that anyway. So it's more important from a Brexit angle in terms of kind of government stability. From a just purely UK perspective, it's maybe not as good news. But nonetheless, we're seeing a positive reaction in the FTSE, and we'll have a look at that chart as well to see whether that has some legs. All right. So that's crude. So we'll get to that in a minute. Typically start with the currencies. So probably the least interesting chart actually is the euro. We've just been in this daily range roughly between 111 and 113, and it's quite hard to point out, which way it's going to go. Obviously the trend is higher. I'm leaning towards thinking that probably it's going to break out higher eventually, just in the direction of the trend. But if we pull out to the weekly chart, you can't really pull out any particularly decisive patterns from these weekly. It's obviously reversed from 113, but then it's reversed a couple of times from just above 111. So definite uncertainty here. And I did read somewhere that speculators, if you look at the, I think this was the case for the pound and for the euro, that actually speculators have added bullish and bearish positions. So there's uncertainty even from the big players which way this eventually turns. The bearish case, we're near the top of the trading range, though I'd argue that we really need to head up to 114.50 to have a better case for that. So top of the trading range, typically you want to go short. The bullish case is that we're in a short-term bullish trend, and that you'd expect that there just to be a continuation of that trend. So both of those could pan out. We get a break above 114, but stall again at 114.50 is possible. Moving swiftly on. So here's sterling. So we obviously rolled over a bit from this bullish trend. We're kind of trending down at the moment, but this was not a particularly, this is not a particularly conclusive lower low here. So obviously we're making lower highs, a lower low. Not a particularly conclusive lower low. Basically clipped 126 and we've jumped quite a lot. And then if you pull out to the weekly chart, you can see the significance of this level. I'm going to zoom in a bit. Well, maybe I'll get rid of that line that I've just done. But look at these three tails we've got in now, right in this confluence of the 20 and the 50-week moving averages. And 126 has been quite a consistently pivotal level here. In fact, if I put it on a monthly chart, this is even harder to see, especially with my lines on there. But you can basically see the sort of the monthly closes. 126 is kind of been it, especially with these 3 months here. I think that was December, January, February. Were basically the monthly closes were all in that vicinity. Then we had the break. Now we've pulled back. So the bullish case here is that we've basically come back to test the old resistance as support, and then we're moving higher from there. Obviously, the fact that we're in such a long-term bearish downtrend is the main argument against seeing high prices from here. I tend to think we're in the midst of a bullish reversal, but I'm very much cognizant of the fact that we're kind of downtrending here at the moment. So we really need a push back through 128 to confirm that we're looking a bit more bullish again, basically make a higher high. Then I would expect another swing down after that to present potentially some lower risk longs in the market. At the moment, probably the most straightforward setup would be something bearish in below this 20-day moving average to send us back to the lows again. Oh, the other thing to note is actually I increasingly just don't use technical indicators as much as I once did, but it is worth noting that there is a bit of bullish divergence here on the RSI. Obviously we made that lower low of kind of dubious lower low, as I mentioned, and on RSI we didn't. We made a higher low, so that often is the first indications of a bottom being in place. Moving on to dollar yen, obviously there's not any particularly fantastic trend in place here, but actually I think the weekly chart is a lot more instructive here. We've made the big surge, and I've talked about this level for the last several webinars, but we've had two nice weekly reversals off that 109, which is the 50% pullback, and it just looks like this correction's ending. And we're getting a nice push higher today, where if we closed as we currently are, this close, I believe that was a Sunday candlestick, but it would encapsulate 1, 2, 3, 4 closing prices. So, and obviously if we closed above the highs here, it would encapsulate four days worth of highs. So indecision all in here, a big bullish move, days of sort of bearish indecision without much, without too much direction. A couple of long candlesticks here suggesting some demand in this vicinity, and then the confirmation with the push higher. To me, in combination with a strong move of 109, suggests that we're looking at higher prices. And then, given that we've kind of struggled at this 111.50 area, 112 area for a while, would to me suggest that we probably would make quite short work of the move up towards 114. Euro sterling, I'm already on the weekly chart here. This is again another example of, well, obviously we talk about the uncertainty in sterling and in the euro, and that's obviously playing out here in that these weekly candlesticks aren't really going anywhere. And we're basically right in this 88.50 resistance area, which could prove to be the top of the range, like it has on the last couple of occasions. Or we could actually finally break out. And again, it's another scenario where, given that we've already tested it twice, once we actually do break out to the top side, we should be up and above 90 quite quickly. Equally, we may not do that, and we may just be right back into the range again. It's pretty hard to pull out a direction here, only to know that we're at a significant level. A bearish case for why we might be about to roll over back into the range is that we put in a lower high here, and this was quite a strong bearish reaction on the doesn't look so impressive on the weekly chart, but it's sort of two pins at the 88.50 resistance, so then a slightly lower high. So I wouldn't put too much emphasis in that, only if we took out the lows down here about 87. Then you'd pretty much be able to comfortably classify that as a double top and think that maybe lower prices are on the cards. Difficult one to trade at the moment, that one. So here's the UK 100 FTSE as we trade it. It's bounced again nicely after putting in those two, the two long tails right at 7,400, which has been obviously a key pivot on multiple occasions now. The prices are reacting to the top side again, so just doesn't quite seem to be, even though perhaps we're looking at a period where the pound can strengthen a bit, doesn't quite seem to be the demand to really heavily sell off the FTSE when, for example, we're about to look in a second, the DAX in Germany is making record highs, the S&P 500, the Wall Street, they're all making record highs in just last week. So can you really justifiably heavily sell off the FTSE when global stock market's pushing high? Probably not. So hence we're getting the bounce here. We're pretty much still in this range. Any trade at the current price levels to me would not be high probability, because you can basically drop down to the bottom of the range again, or you can head to the top. So in the middle of the range, not ideal. Benefit of hindsight, obviously buying at the bottom of the range, and I don't think it would be too crazy to look at opportunities when we get to the top of the range again, around 755.50. One thing I would say is that these three candles in themselves together is quite a kind of bullish pattern off a 50-day moving average. So if there were any retracement of today's strong move, perhaps down to the previous 2 days highs and the open, that maybe would be just a retracement of a bullish move, which could get some extension up towards, again, the resistance, where it's quite clear where the resistance is, 75550. Here's the DAX I was talking about. Obviously, we had the we've got the push higher off here, which is kind of a rising trend line in and amidst the 20 and the 50, which are working quite well. It's it's kind of a price range, but it's an upward sloping price range, and you know, I think it's really probably just a matter of time before we break to the top side again. We did have the German IFO data, which was a big cause of risk-on moves in the market. We'll have a look at gold in a minute. We saw there was a massive slump in gold, literally collapsing like 1% in the space of 10 minutes after that IFO data came out. Yeah, here's we had a bit of a weaker, a slight slide last week in Wall Street, but overall, obviously still well above the 20-day moving average, a pretty comfortable uptrend. And we've had a few days of decline, so this, we've clipped above the high on Friday, and looks like it's breaking out for another rise. The risk is after, we haven't had many periods when there's been 4 days in a row of declines, so you've got to be careful of scenarios like this where we have 4 days, little pop up, maybe 4 days again, a little pop up, and then suddenly a collapse. So that's a possibility, and that this kind of move could happen, and we could still stay above the 50-day moving average. It would still be comfortable as part of an uptrend. One example of where this has already happened, obviously, is the Nasdaq. So here's that big slump, and it's interesting at the moment that we've been respecting the fibs quite well. So I'm just showing you the kind of context of, the fact that the 50-day moving average, as I mentioned in the week ahead video, is worked several times as support, even twice here, you could argue, and we're pushing up to the top side after that slide. So we're kind of entering the stages of maybe the last hope of any renewed sell-off. So if we again drop down to this 4-hour chart, you can see that this was actually, these highs were in around the 50 level. I've just taken it off for now, but you can see we broke above those highs, consolidated, broke to the top side. Now we're above the 76.4 fib, and I would say this 5850 kind of area, which was these lows that we broke down through quite dramatically. If we can get above there again, then we're probably up for the highs. This would be maybe one last area, then the highs where the sell-off could resume again. Although even though you're for sakes of interest at a quick trade, you kind of want the sell-off to resume, but in the context of just such a strong upwards markets, it's risky to try and play for these sell-offs in the stock indices. Why could it happen? Potentially, I was saying in the week ahead video that actually a rise in oil prices could negatively feed back on the Nasdaq. It would be good for risk sentiment if oil prices continue to recover, but actually people may start dumping tech stocks and moving back into oil markets and industrial companies and things that are a bit more tied into the oil price. And here indeed is oil. So we've come right down comfortably to 45 in Brent and had a little pop from there. Depending on your style of trading, but for me it's much too early days to be able to call a bottom in this. And I wouldn't be surprised to see another retest of 45 before we have any chance of rebounding. Just looking at the weekly chart, these lows here, 45 obviously did support us in this consolidation here. It was where we had a bottom in the past, so there is some significance to this. It's a big round number obviously as well, so it certainly could, but to me I'm still eyeing this the breakdown of RSI here, 45, which was kind of supportive of an uptrend in prices. To me the dynamics changed in the market. We're not really in an uptrend, and I'm not necessarily looking for buying opportunities anymore. Even if we put in a little short-term bottom here, that to me more likely presents a bounce to sell into than the end of the route. So at the moment, just carving out a temporary bottom, to me, I'll be looking at 47 to see if there's any reaction from there. Maybe we can tail off again, or maybe we just have to make up some ground up to the moving averages, which could coincide with maybe just somewhere underneath 50, where maybe oil bears join in the party again. And last but not least, gold. Now this has been quite a pivotal level, this 1240. We quite dramatically dropped through it. Now if we end up with a kind of long tail today, that could be a nice false break to capture some of those last bears that had orders, sell orders below these lows. So obviously the market whips down there, a sell step order gets triggered, and then whips higher again, and those people are forced to cover their sells, start buying, and then the market's able to push higher. That's a potential scenario here, but at the moment it's quite a big bearish engulfing candle, and if the day stays like this, I'd be inclined to think that maybe we actually take out the rising trend line. But that would be the next one to watch, around the kind of 1230 level. In and around here. So, and obviously we're taking out the 1250 level again, so big bearish candle. If you're trading shorter term, maybe look for a bounce into around 1250 and see how the market reacts there, because that could be where the sell-off continues. Got a question on WTI here. I can certainly bring that up. What I tend to do is just kind of, when there's very similar products like Brent and US crude tend to trade together, Euro dollar and dollar Swiss tend to trade together, obviously just in opposite directions. So I tend to not try and double up, because then suddenly you get tempted into placing the same trade twice, which are between two instruments that are very highly correlated. Hence I don't typically look at US crude, but obviously on request I certainly will. Sometimes the question is, which market, if there's a downtrend in oil, which one is looking weaker, which one has the most potential downside in a downtrend, which one's looking stronger in a downtrend. Maybe that's the first one to reverse. Certainly a valid question, but to me the picture looks quite similar in both of those, where we were in a fast-paced uptrend, we moderated to a kind of rangy uptrend, and to me we've taken out the lows on several occasions here. It looks like we're turning more into like a rangy downtrend, which could at any point accelerate quite aggressively. Not quite sure what the catalyst would be to really justify a sell-off, other than just continually strong US production and no particular reaction from OPEC. But we've clipped 42 in WTI. I suppose the kind of a more interesting level for trying to pick the bottom, if that floats your boat, would be down near 40, because that was obviously the low here. Below there, then I think we really are. There's potentially going to be a sudden sell-off of option, maybe option-related sell-off, take us right down to 30. But I think one thing for the bearish case, quickly before I ramp things up here, is again the kind of 45-ish on RSI. You can see how we're moving between 45 and 60, and then now we're not in both Brent and WTI, which to me is a bearish development, and it's good that they confirm each other. So I'm going to wrap things up there, but I do have a last question on OPEC. I'll certainly address that, but I'm going to stop the recording, say my thanks,